Welcome, everybody. My name is Tim Ogden. I'm the managing director of the Financial Access Initiative at NYU Wagner. Hopefully, you know what that is and who I am for being here. Um, the other folks that are joining me, I'm going to introduce briefly in a few moments, but I want to tell you about what we're doing here and why this is different from a lot of other things that we do. A few weeks ago, I saw this news story that Jerome Powell, the chair of the Federal Reserve Board of the in the U.S., and U.S. Treasury Secretary Scott Bessent had a private meeting with the CEOs of the 20 largest banks in America to talk about the threats to the financial system from emerging frontier AI models. And I thought immediately, I bet they're not meeting with the CDFIs and the community banks and the credit unions about this. And I thought, and I bet the regulators in many middle income and developing countries are also not meeting with the institutions and organizations who have made tremendous progress in financial inclusion over the last 20 years. That's concerning. But then I thought, well, maybe it's just nobody has invited me to those meetings. So over the course of the next week, I started having conversations with more and more people, and I became convinced that, in fact, while there were some conversations going on, there weren't enough. That I didn't see the kind of reaction that I thought was absolutely necessary in the financial inclusion community happening. And so thought perhaps this is a useful way to use the FAI platform to try and catalyze conversations, catalyze the efforts of the global financial inclusion community to raise the awareness and the salience of these things. Now, what that also should tell you implicitly, I want to make explicit, is you are not going to hear today a considered plan of action. You're not going to hear, here are the 5 points on how you can fix your infrastructure to protect yourself from cyber threats. You are not going to hear, and we're launching a new initiative at FAI to tackle this. The entire point of today is to empower the community to take action. I recently wrote a review for SSIR of a book called Financial Inclusion, How an Idea Became a Global Agenda. And I'll tell you, I don't think it's a great book, but one of the things the book really does point out is the huge progress in financial inclusion is not because of central actors in the middle saying, here's what everyone should do. It's a wide range of organizations from all over the world saying, this is a problem. We are going to take action. We are going to collaborate with others as necessary to make good things happen. And I think that's what needs to happen here. The other thing that really frames my ideas here is I'm going to date myself and say, I started my career in the IT industry in 1995 and started hearing about the Y2K problem in 1996. And for those of you old enough to remember this, it turned out to be kind of not an issue when the clocks turned over. But that was because people took this problem seriously and urgently and put out tremendous effort to deal with the problem. But that was a thing that people were talking about and working on for at least 4 years, if not longer. Today, we're in an environment where from the awareness of this problem to potentially catastrophic effects is on the order of 6 months. And we need to take that compression of time really, really seriously and react as if we are in the last 6 months before the turnover of the clocks that might break a whole lot of things. So to engage in that conversation today, I invited a group of folks who are knowledgeable and I learn a lot from. And so I want to quickly introduce those people. You have links in the chat to some more if you want to sort of follow a little. I'm not going to do lengthy introductions. But first, Patrick McKenzie, who is a person who knows more about the technology of financial infrastructure than anybody I've ever talked to. If you are not reading his blog, Bits About Money, and listening to his podcast, Complex Systems, and you're in this space, you're doing it wrong. This is absolutely stuff you need to know, and you only see Patrick writing about it in the way that is really useful to people in the space. Benny Chuk from Dovara is the head of the Future of Finance initiative there. Again, if you have been involved in global financial inclusion, you know something about Dovara, particularly in South Asia. And Benny will be sharing some of her perspective on what's happening in South Asia. Bushle Gosar is deeply involved in fintech in sub-Saharan Africa, based in South Africa, and is on the board and a co-founder of several fintech organizations. Matthew Bird is our token economist. For those of you who know me, you know I'm not actually an economist. I only play one on webinars. Matthew Bird is actually an economist at Universidad del Pacífico in Lima, Peru, and has been doing some work on the consumer side of this equation. How can we plausibly help people better understand the threats to them? But I think that applies broadly. And finally, Andre Simon, who is the CEO of Finca International, one of the OGs of financial inclusion. There were people doing this since the late 70s, early 80s. And, Finca is an outgrowth of some of that very, very early work in financial inclusion. And so Andre has a great perspective on a broad network of microfinance institutions. So to get us started, I'm going to take a deep breath because I really talked about a lot of that very quickly. If you know, you know, I grew up on the coast of Colombia where we talk very, very fast, and I've never lost that even in English. So apologies to those of you who English is not your first language. Hopefully the captions are working. I should note you should be able to turn on translated captions into most major languages if that's helpful for you to follow this conversation. But I'm going to start, Patrick, with you, an overview of where these emerging threats are coming from and what it means in terms of what gets talked about in the space of sort of the increased attack surface. So we were talking just before we started about Willie Sutton's famous quote, "I rob banks because that's where the money is." And that's relevant here. But part of the challenge is that it's a lot more than just robbing banks because that's where the money is. There's a lot more access to where the money is than there ever used to be. So Patrick, would you just sort of give us an overview of how you think about the shape of this problem and the breadth of this problem?
Sure. So remind me to talk about how central banks specifically have been asking this question in meetings, because I have a relevant anecdote. But uh, I'd like to broadly characterize this as two things that we all need to get used to in this new age of AI. One is very familiar to financial institutions. We have operational processes that are in some ways dependent on it being very hard to do certain things in the world. It's hard to produce an invoice. It's hard to produce audited financial statements. It's hard to produce a something which plausibly looks like a government ID, et cetera, et cetera, et cetera. And in part, it's hard to do these things because the labor required to do them historically has been gated within particular classes behind particular professional backgrounds. And we have some ambient assumption that the people from those backgrounds are broadly trustworthy and they are surveilled by institutions around them where if you're an accountant and you commit accounting fraud, that's it for your career. And it's much easier to just get a job at a bank and be an honest accountant than to be a accountant for a fraudulent actor. These assumptions are going to get severely tested. And I'm sorry, I worked in Japan for a while and we do devastating understatement in that fashion. These assumptions will fail if they have not already failed. You can produce something which is equivalent to the audited financial statements of, for example, well-regarded United States charity with a budget of $200 million a year with the click of a button in a fashion which is basically available to 16-year-olds. The bad guys know this. They are starting to do this. They're starting to do this to financial institutions, and many of you also work with financial institutions. Your financial institutions are going to have to ratchet up how annoying they are about things like how much information do they require from you when you onboard on an account? How much routine operational friction is there when you ask for disbursement of money? And because you might very well get told at some point in the near future, how do I know you're you? Because 47 people have claimed to be you to me today. And if your answer is, well, I'm the one on the webinar with you and they weren't, no, they were all on the webinar with me, is a thing that is very, very technically possible. Not 6 months from now, that is a commercial product you can buy today. The companies that sell that product try to defang bad actors' use of it inconsistently. And the bad actors have in the past had quite a bit of success in developing their own software, which is called ratware in the industry. And the ratware will have no acceptable use. provide the provisions in its terms of service. So you need to be worried about the operational environment in the traditional practice of finance. Number two, the technical environment is going to get very, very bad, and it will stay bad for a period that we don't know how long it will be. Even the best informed people in the labs in Silicon Valley. And by the way, not speaking directly for any lab in Silicon Valley, but I have some friends at various levels of seniority, and I've had this question quite a number of times. Historically, for the last few years, we've been in a period of what you might say in software security is defender's advantage, which means that the prodigious expenditure of resources on the behalf of the largest software companies, Apple, Amazon, Microsoft, Facebook, yada, 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 had closed a lot of the vulnerabilities that existed in widely deployed software. The amount that was spent on this was tens of billions of dollars. And that is why not to endorse it, but the iPhone is probably the most secure computing platform that has ever existed, inclusive of things that are used in to control nuclear weapons. The much of the software you work with is better than it has ever been. However, the capabilities recently demonstrated by a product that came out of Silicon Valley were basically point this at a computer program, any computer program, and it will develop exploitable vulnerabilities automatically, basically instantaneously. Um, well, it's not instantaneously in doing it in 5 seconds, but the operator just has to say, "Here's the target, go," and then machine whirs, and the machine comes back with, "Yes, done. Here's the exploit you need." This is very bad news, and the exploits that it successfully achieved were against software which has received billions of dollars of labor of hardening. Very little software that you use internally has received billions of dollars. Much software that you use is produced by professional software companies that do not have the resources of Google, that have not received tens of billions of dollars of hardening. And that software will probabilistically fail the first time it is targeted. I have one other observation to make.
Mhm.
Historically, the bad guys have sort of, when they develop a vulnerability, they try to see who is the biggest target I can apply this to get the most amount of money before the world recognizes that this is a problem. And so, for example, state-sponsored attackers in without loss of generality, North Korea might say, "Okay, I have a vulnerability. I will spend it once on a Bitcoin exchange. I will make $100 million, and then the vulnerability will be closed." Because of the capability of AI to parallelize attacks, it's possible that you can parallelize the attack across 10,000 financial institutions in the course of a Monday morning. And so before anyone realizes that there is a new vulnerability, everyone has been hit. And because of the extremely low cost of parallelizing this attack, if they hit your institution for $500, that is probably incentive compatible for them. And so many of us have been existing in the world with a defensive strategy of being too small for the bad guys to notice or be able to economically attack. And that defensive strategy will not work in the future. And then my final observation with regards to things that are being said at central banks. I do not frequently visit central banks, but the Bank of England did call out to Silicon Valley and say, "Hey, we've heard this AI thing is potentially relevant to the bank's interest. Can you send somebody?" And Silicon Valley, not being very close to the Bank of England, they said, "Patrick, you go." So I did go over and have a bit of a chat with them about the AI thing, and the Bank of England graciously said that I could repost substantially similar comments on my podcast. So if you want an inside line on at least one conversation that had a central bank, you can
Mhm.
find that on the open internet. And hopefully, Silicon Valley will send people out to the other central banks because they are important. You have, large user populations who need to be protected from some of this stuff. With that, thanks very much for your time and attention.
Thanks, Patrick. As you can see from that, the scope of the problem is a lot bigger than I think a lot of people appreciate. And certainly one of the things that I have watched in the last 10 years is progress in the financial inclusion space has been built on lower cost digital tools to be able to do not just the mobile money transaction, but things like communicate with staff, to communicate with customers, to vet customers, to vet staff, to do all sorts of other things that are possible at very low cost. But that also then makes these things vulnerable. And one of the things that Patrick was talking about there was that the chaining of attacks, which is a new feature, which isn't just the I have to penetrate this one system. Once I penetrate your email, I can use your email to penetrate your HR system. Once I penetrate your HR system, I can penetrate your two-factor authentication system. Once I penetrate that, I can penetrate your bank account. So it isn't just are you protecting your bank account, it's are you protecting everything that's connected to everything else along that chain, and recognizing that it's not just you, it's how many of your partners also are dealing with these sorts of things. So, Benny, I want to turn to you. India, South Asia in general, is at the leading edge of the developing world in IT human capital. How concerned are you seeing people in South Asia being about the threat given an environment where there is greater access to the human capital potentially necessary to take some action here?
Short answer, very. I think uh, it's one of those rare moments of great equalization in many, many ways. And I think we all have to be worried. There is no other way around. Up until very recently, up until 10 years or maybe 15 years back, the vantage point of regulation used to be how big a vector or carrier are you of money? And therefore, we shall regulate accordingly. Then, when digitization started to happen, the question changed to how big a vector are you of information? And now let's regulate you accordingly. But now the question is you're a vector. If you're compromised, you will compromise others, and I must regulate, right? At least that's the feeling that I'm getting from the last 15 days, where quite similar to other countries, Indian ministers, Indian central bankers are having the same conversation. I think the rooms are just repeating themselves over across geographies. The concerns are very much the same. And the short answer there seems to be, like Patrick said, that there is no hiding under any kind of risk threshold now. No firm is too small. No firm is under the radar. And in fact, you know what? Listening to Patrick, wow, Patrick, wow. I mean, I'm not going to sleep tonight, but thanks. But you know what it sounds like is that there is like a change in the DNA itself. Like cyber threats are now, of course, scalable, very, very sophisticated, but also very, very adaptive, right? So and I was just kind of having this soliloquy before this conversation, and I was just thinking that even the terms that we use, let's patch it. I don't think patch it is going to get us there anymore, right? Because it's just constantly evolving. So we will always have to. We've entered a game theory position now. So it's kind of an infinite game now where we're all adjusting to each other's best responses. So are we worried? Yes. Should we be worried? I think double yes. Yes, this is a reason to get worried. And up until now, we've basically found the optimum equilibrium in saying that we would have regulation that is risk proportionate, etc. That is not going to work because the weakest link is the link that is going to get it all down. And we can't afford to have one, is my sense. In India, Tim, as you already, I think the world kind of knows India as a case study, really. What we have seen, like in other countries, is like a diversity of institutions coming up to further the agenda of digital financial inclusion. Some of them are directly regulated. Some of them are regulated. We are the regulated entities. Some of them have a financial leaning. Others are just tech firms who are supporting financial firms, but are equally carrying the weight of financial decisions and financial risks, right? Those lines will blur if they haven't already very, very quickly. And I think everyone will be equally concerning as a financial regulator. I can no longer say you are a tech firm, you are a third party, you are a vendor, and kind of, reduce my watch over you. And I think we will have to do that very smartly because state capacity is limited wherever we go. And those firms are like, I mean, I don't even know how diffused the value chain of AI is, but I'm thinking that every single program has like tens, if not hundreds of vendors associated with it. So there is that concern. So we'll have to be very smart in how we regulate them. But also what Patrick just said, right? this kind of resource, this kind of intelligence, this kind of labor, intellectual capital bandwidth has never been allocated to solutions before, the kind that AI is benefiting from, right? So we have to now defend at scale. And we have to defend them in their own game. So I'm guessing we have to defend using AI, but I'm not the expert. And I think those are the top thoughts that are coming to me.
Yep. Bushle, before I turn to you, I want to note there is a poll that about 2/3 of our audience has answered. I'd really like to get that a little bit higher. So if you haven't answered the poll questions, please do that. Also, please use the Q&A function if you have questions that you'd like to see us address. Use that, please. But Bushle, the Sub-Saharan Africa is, where the mobile money revolution started. It is a source of a huge amount of fintech innovation, built on, the technology's ability to reach places that were never really reachable before. At the same time, it isn't a place where we think of, oh, there's just a large amount of human capital capable of dealing with some of these things. That they built on rails that have been put in place without necessarily having a whole lot of ability to manage those rails. What does the perspective look like for sub-Saharan Africa, fintech in particular, thinking about the frictions that now are going to come onto these rails that so much of the infrastructure has been built on?
Yeah, so I mean, I was trying very hard not to crawl under my desk and just curl up and cry as Patrick was chatting. But you're right. The financial inclusion kind of revolution and the progress we've seen in sub-Saharan Africa has been built on really complex value networks of providers. And I think Benny alluded to that. So you have a mobile network operator with the bank, with the fintech, and together they're able to lower the cost of providing, a loan to an agricultural entrepreneur who's never accessed a loan before. And what that does is that it does mean that the attack surface is huge. And it's not, for the most part, there hasn't been a lot of investment in cybersecurity. So, what I think we need to really think about is what is it that we are protecting, right? And what it is that we need to protect is this innovation in this complex value network, right? We've built on top of this now, we've started to build, things like open finance, we've got alternative data scoring and so on. What it will require, which conversations have started but have not coalesced, is first of all, we need to break the fragmented regulatory approach. Because the other thing that comes out of this complex value network delivery is, if you think about it, you've got your central bank, you've got your ICT ministry that has oversight, you've got potentially your home affairs ministry or whatever you call it in each country, which is looking after your ID, et cetera, et cetera. All of these people are needing to evolve policy and oversight at the same time. And we need to make sure that whatever they come up with is properly orchestrated so that it can be implemented without exploding the cost of compliance, right? So that is something which really needs a lot of thought right now from a regulatory perspective. From a governance perspective, we have boards that are stretched. All of this is really new. We need to think about how do we upskill in real time and move from kind of static conversations in audit and risk committees to more active conversations where we're talking about what are we testing, how are we collaborating with other actors within the industry. And then within the operational environment, we need to think about some homegrown innovation, because in as much as they may be solutions coming out of Silicon Valley, some of them may not be fit for purpose. We do see some innovation coming out of sub-Saharan Africa, South Africa particularly. You have the likes of Orca, you have the likes of Smile Identity and so on, who are really looking around this area of cyber resilience, right? And I think we need to see a lot more investment in some of those players, because there's a lot to protect here.
Mm. I want to say a special thank you here to Matthew, who is on his way to the airport, is immediately after the webinar ends, that he made some time. And I started this by saying you're not going to get a bunch of solutions. One of the reasons I wanted to ask Matthew to join is that he has been doing some work on how to help consumers recognize digital fraud. And there are links to that I put in the chat right at the very beginning. But Matthew, what I wanted to talk to you about was not so much like the literal specifics of that project. Although, absolutely protecting consumers is a big factor that we need to be taking into account, is more the theory, the learning theory about what you discovered about how to teach people, whether it's customers or staff or anybody else you're interacting with, about how to cope with threats given this very dynamic surface. So, would you just give us a quick précis of what you did, but more importantly, on the theory that we've talked about how do you get people to really actually learn how to
Mhm.
protect themselves?
Yeah, absolutely. Thank you so much, Tim. And it is humbling, a humbling a humbling first 30 minutes reflecting on these issues. I think the first I'll set this up. I'll respond to what you just asked, Tim, but I'll set this up too because it is about not just kind of the consumers themselves, but it's also about the human layer that we have within. It's not just in consumers, it's the frontline staff, it's the agents, et cetera. It's the people, even the coders, in terms of they're making decisions. Every single one of these system level vulnerabilities, dare I say, runs through a human decision at some point. And customer clicking, an agent approving a transaction, a staffer responding to a spoofed email. We could go on and on down the list. And so, the question is, obviously, we need, Boufle was talking about a regulation. We need systemic interventions, but we can't forget that human layer. And that human layer is almost kind of our last stand, if you will. And it's what we have now as well. While we try to build, I think there's space for more defensive AI. In terms of fraud detection, in terms of credit cards or what have you. How can we translate this into more sophisticated defensive and protective AI as well? But behind that, so the question is, how do you? And we've all received, those. I'm sure we've received those test emails from our IT department saying if you click on it or what have you. And I'll just use that example because you see these examples of trying to train people on fraud prevention, or you see a lot of kind of public campaigns. If it check the number, check this, do this, just hang up, etc. But what a lot of those are built on is they're built on this idea of sharing information. Or even the spoof email is whether you pass or fail, but they don't really. Then they give you information after that. And really, what's needed is this idea of building capabilities and building kind of what I call critical capabilities. And we did this in Uganda and had some evidence for it, where people, and these are all digital skills. I think it's adolescents being online, et cetera, is knowing how to interact very critically. In term with your environment, of recognizing triggers, of having heuristics, of knowing what to do. And knowing what to do is more than information because you have to know how to do it. And so what we did in Uganda was we said the best way for people learn by doing. And so let's teach people how to prevent themselves from fraud by simulating fraud experiences. And it goes way beyond that one-off spoof email. It's we went through Viamo working with Airtel, reached 27,000 people in Uganda, and the treatment group was basically, let's simulate what it is to receive lots of fraud calls. And not all of them are fraud calls. We're going to teach you how to decipher as well. And I think that's an important piece. And so basically it was almost, the users loved it because it was in a safe environment, but they were trying to figure out and learn how to recognize and make decisions. And basically it's a choose your own adventure game because fraud is actually kind of a journey itself. It's not always just that click on that SMS and they take your money. They reel you in. They tell you narratives that continue to lead you along, etc. What we did was we replicated that, and with each point, each decision point. So there are multiple decision points. You don't realize that and your own fraud prevention, there's multiple decisions that you're making in sequence. And so what we did is we basically then wrapped in heuristics at each of those decision points and at the right time, right place, after they're experiencing it, and something simple like ears, eyes, heart, for example, right? If no one should see this information, just the kind of mental checklist. But you could send someone that mental checklist and maybe they'll remember something from it. But there's a learning retention, and a capability that's built when you've tried something, and then this is just simple learning, and then people give you that teacher, if you will, gives you that feedback right on time, and then you go back and try it again, and you put it into practice again. And so what we did was we created that environment, and ultimately what we had was 9 months after the intervention, we had, in terms of kind of fraud capabilities, we had an index for that, really significant increase in that. And we also had 20% reduction in money lost from fraud with that. And so we're continuing to kind of build that out. But I think where we can extend this is say, how can we take that very learning theory, which is about building critical capabilities, and it's not just those inline consumers, it's also for the agents, it's for the frontline staff, and we could think about how can we do this for the entire human layer that's vulnerable in this system.
Thanks, Matthew, and Andrea, you're the CEO of an organization thinking about multiple MFIs in multiple countries with finance staff, with frontline staff, with customers, with bank partners. How scared are you? How are you prioritizing what you have to be doing? And particularly in an environment that I want to hammer home, which is the institutions doing this are not high margin businesses. They are built on very thin margins, being very efficient. We look at a CDFI in the United States. We look at an MFI in Brazil. We look at in non-bank financial institution in India. The margins are thin. And they are built on reducing costs at every possible. And we are introducing this, as Matthew said, it is possible, but it takes effort, it takes thought, and it takes ability to cycle through this. So, like, when you think about what your list of priorities are, where do they sit right now?
How little do I sleep every night?
Another way of putting it.
Yeah. So look, I'm so glad that you started with that theme of fragility, because I think there are two ways where we have just intense fragility in our tranche of the financial services market. The customers are financially fragile, and the institutions are financially fragile, as you pointed out. But also trust and experience with the financial services system is very fragile as well. And I think that goes back to what Matthew was talking about in terms of the customer facing interaction that we have as institutions, that's so paramount, but can actually be tipped over really quickly if there is a financial disaster. I thought everybody talked about everything that I wanted to talk about, but I do want to go back to what Benny was saying, which is we, of course, as an institution, have to have appropriate governance in place. And we do. We have a dedicated board committee that looks at penetration testing and, how many attacks we've had. We have dedicated resources across our network that are tracking what's happening on an ongoing basis. We rely heavily on big partners like AWS and Microsoft that are part of Project Glasswing. And so to a large extent, we lean into what we have to do. But the reality is, when you look at financial institutions that are delivering microfinance services, they're not even close to being able to afford the basic technology that allows them to be, quote unquote, modern. And so there has to be a systems level response if we have any hope of actually ensuring the protection of those vulnerable people that Matthew was talking about. And I think that organizations like ours are really better positioned to provide the outreach and the education and to have those very strong government level resources and shared resources that we can rely on. But honestly, my biggest fear in all of this conversation, and I maybe even shouldn't say this, but my biggest fear is not the vulnerability, and it is huge, but it's actually the potentially the other side of this coin, which is the lack of access that all of our customers actually have, and how they're not fitting into at present the ecosystem that is talking about AI. They have limited connectivity. We know that only 27% of that 27% of low-income populations have access to the internet at all, right? The cost of compute is high, and they have energy poverty. And so all of these wonderful benefits that come along with having access to AI, being able to use alternative information, being able to customize product design to serve the needs of a variety of different businesses, being able to actually share more information with customers, that won't happen if we don't actually accelerate the push of AI out into the system. And Finca is doing that. But obviously, there's a huge risk associated with that. And so we're doing what we can to protect ourselves, but we need partners who are going to have the same level of urgency around that. And we need the help of regulators, and we need the help of bigger institutions that have deeper pockets than we do.
One of the things I have benefited most from my interactions with economists is the equilibria change, that not just one part of a system ever changes, other people react. And so while I tend to be on the doomer side of many things, I am a worst case scenario kind of person. It is important to recognize that it isn't only the bad actors who are acting. Other people are acting. And ultimately, the question here is, are those people who are acting also taking into account the edge of the network? Ideally, they are, but we know from history that often they don't. Patrick, I want to come back to you from a question in the Q&A about why aren't we seeing more of this already? One, I would argue it is happening. We're just not talking about it. But I want to get your sense of where we are. Are we already seeing a material increase in threats and penetrations and attacks from even the existing level of AI models that are out there?
So I have good news, bad news. The good news is that the attacker is in many. So people have this idea that hackers are just some kid standing in his basement or similar. The hacker is a relatively capitalistic institution. They have an org chart. They have annual performance reviews. People get bonuses, and so some of them are good at their jobs, and some of them are not very good at their jobs. And some of them are like, AI, I've got other things to do. My manager has been, asking about the schedule for the thing that was already committed to Q1. That's the good news. It's going to take them time to figure out how to adapt to this, just like it's going to take us time to adapt to this. Here's the bad news. When it hits, how will we know? Dave Caston, who's a great writer, has this evocative phrase called adversarial touch points, where not just for financial institutions, not just for someone who is actively defrauding something, but there's a variety of places in society where the amount of labor that can be brought to bear is load bearing. And so one adversarial touch point is there's a variety of government decisions that they could make where a person has a procedural right to file an appeal. And filing an appeal is difficult. And so the government has staffed the desk that handles the appeals such that it can turn around a certain number every 6 weeks. How many appeals has the government received in the last 6 weeks? How does it know? In many cases, it is not actually capable of counting that for various institutional and procedural reasons. And it does not know that, wow, I have received 100 times as many appeals as I have previously. We're starting to hear anecdotal reports in various places on things like property tax appeals in the United States, that the number of them is past any historical benchmark by an integer multiple and increasing. But many of the institutions who I would naively expect are already experiencing this are, choosing my words carefully, through their considered choices in how they architect their processes, they are physically incapable of discovering that they are in a new operating environment.
Mm.
I would encourage us to be physically capable of understanding that we are in a new operating environment before we discover it from the fact of the bank account being dry.
Mm-hmm. One of the things that I think about a lot is, coming back to these frictions and the way they affect the institutions who are interfacing with customers. Not so much the challenge of interfacing with a customer itself, but the challenge of interfacing with the rest of the system. We started talking a little bit about this earlier, and for the CDFI in the United States or for the MFI in other countries who is receiving funding from a bank, that system is designed on the belief that it's really hard to fake that this request, that this information, that this transfer is coming from me. And that is no longer the case, that many of the higher order, larger financial institutions are going to have to suddenly implement much higher frictions, and that organizations are not, the organizations who interact with those are not necessarily prepared to provide or deal with those. They don't have the staff, as you were saying, Patrick. The physical counting of how many times I have to verify to the bank that it's me, and what that does to the overall system at every level. How many customers drop out of the system because it's so frequently annoying to have to verify every single time that it's me. How many institutions stop serving a certain portion of customers says it's so hard to get them to verify that it's them. How many banks stop dealing with lower end financial services institutions because it's just too hard to know that they are protecting themselves. So, this is a broader question. Benny and Bushley specifically, where do you think the biggest new frictions are we're going to see those first in sub-Saharan Africa, in South Asia, that affect operating procedures in ways that we're not prepared for?
So I don't know if this is a friction or really just an impact that I worry about, that is likely to manifest very quickly. So we touched a little bit on some of the capex requirements that will be required to deal with this, and whether institutions can actually bear that. But as you have increased fraud incidents and the cost of risk goes up, you'll see that going up. You'll see your cost to access capital going up. You spoke a lot about training, right? Matthew was talking about all the different things you need to do, training your customers, training your staff, etc. Increased operational costs. All of those things will likely have the impact of just people not being able to access, these services anymore. And that for me is a huge issue, up front. And it's something that I worry about a lot. And I certainly just had one comment on what Matthew said about the training, which was to say, one of the biggest risk groups actually is executives within these institutions. Right. I was having a conversation with an e-learning specialist that works with banks across Africa. And one of the things she said they see consistently with the basic training that exists now on KYC, AML, fraud, etc., is that it's always the executives who engage the least with it. And when you think about the fact that if they are the failure point that could create access to payroll risk and all kinds of things. And as things stand in many countries, if money goes to the wrong account, there's no redress, right? It's gone. And so that's also, a group that I think we need to really think about. And if we have to start designing processes which have zero human intervention, what does that even look like? Because the humans are a major risk in the chain, right?
Benny?
So one thing that we're seeing in India a lot is that even most tech-savvy big digital players often worry who the right vendor to contract with is, because there's like very little evidence of, the real skill or real capabilities. And we often hear a demand for accreditation mechanisms so that there is, so, regulation usually gets a bad name in several rooms that we are even shut out of. But regulation plays two roles. One is, of course, sometimes what can be seen as slowing down, whatever, like precautious, but the other is like a market development role, right? So I think that hopefully my hope is that more and more regulators take notice of the actions that they should be taking as a fallout of all of this, because I think that the conceptualization of cybersecurity still is that it is a private good. Everyone has to look out for themselves. We increasingly need to move to a notion of cybersecurity as a public good. And we need like more regulators, more state power for it, for all the reasons that everyone has spoken about. So that's one. One bit of that is regulatory support in accreditation, in maintaining registries, who the good actors are, blacklists, who the bad actors are, right? New contractual innovation, because the liability, one of my colleagues uses this beautiful phrase, it's called distributed governance of AI for distributed layers, right? So the liability will now flow through all nodes, because usually it's not one node that misfired or failed. It is lapses across nodes that compound and cascade and then lead to the big failure. So how do you then apportion liability? So hopefully some innovation there. But my biggest hope is of the positive kind. So it's not the friction of the negative kind, but my biggest hope is that people stop thinking of it as a static problem to solve and start accepting it for the dynamic, adaptive system that they have now entered. And that kind of guides all of our actions, including the regulators, because that needs like a change in disposition itself, that, this is not a one-time do and go kind of situation. Now we have entered like an iterative and feedback loop of, actions. So those are my hopes. The one thing that I just want to say here and then rest my case is there is also something very unique about supply chains of AI, which may make it harder. One is, of course, it's complex, several actors, fragmented. We don't know where the issue really occurred, who really is responsible, opacity, all of that, but also the sheer asymmetricity. When you download big LLMs, big tech LLMs, they come with the explicit disclaimer that anything you build on top of that, if it misfires, it's on you, right? What does that mean for liability allocation? And I think that's going to be one more reason for us to be finding homegrown solutions, because the government of India cannot take some of these to the court. No offense, and I hope I don't get penalized for saying this, but that's where we are, right? So I think, and why I worry about liability is, as a customer advocate, liability is deeply enmeshed with the issue of redress. If I don't know whom to hold liable, I don't know who will come and redress my customer. Right? And to the extent AI harms are redressable, because some of them are like privacy harms, which are irreversible and no amount of money can make them good. But to the extent there is money at the table, who's bringing that money at the table? I think those questions are hopefully things people are thinking about.
I do want to, I have failed to mention earlier that this webinar is co-sponsored with FinDev Gateway. Many of you know about this webinar because of FinDev Gateway, and so I want to thank them for co-sponsoring this. I want to give a shout out to the document that they have already posted. A guide to Mythos level AI models is a very useful educational tool for people if you haven't seen that, and it's one of the things that's in the links that were shared, and that a great place to sort of follow up with additional materials. My screen, there's my screen just changed. It was Andre raising her hand, and I was gonna, Andre, turn to you anyway, because I have heard from some other MFI CEOs that one of the challenges is compromise of internal IT staff, people who you hired not knowing that they had a side job working for some other hacker network. And the compromise there isn't just that there's some new AI model. It's, they have touched the software internally, and that can be extremely hard to root out. How are you thinking about the how you vet staff in this in this era?
So I feel like we kind of learned that lesson relatively early. I'm not going to say that there's not vulnerability to that, but it's really important that control functions be involved in any technology that you're rolling out. And that they start at the beginning of the process, not just at the end of the process, but actually are working side by side with staff to go through and make sure that solutions are appropriate. But you've just got to really do due diligence on your staff and aim to hire the best people. And I do feel like I'm lucky that we really do have amazing people that work at Finca. But Tim, I actually wanted to say, and I'm deliberately being a little bit provocative here, but in some respects, I wonder if the kind of financial inclusion that we do, that is a combination of tech and touch, doesn't give us some sort of natural insulation against the worst possible outcomes that we're talking about. It's really the end-to-end digital providers that don't have any physical contact with their customers that are going to be the ones that are going to be really, really terrified. And of course, there's that trade-off of scalability, right, versus outreach. But given the kinds of customers that we serve, the ideal would be that you'd still have that face-to-face interaction, which gives you that ultimate verification. And then you use the best of AI to do the analytics behind the scenes that actually helps you to deliver a better product to that individual that increases impact. But I'm not going to sleep still, but that's a hope.
Matthew?
Yeah. Just jumping on that, and it's related to what Benny was saying. Now we're all warmed up, aren't we? In terms of the discussion. I wanted to pick up on what first what Benny said, and then what Andre said. So Benny said it's a public good. Cybersecurity should be seen as a public good. And also what Andre just said was the tech and touch. There's a social, there's a contact that's already existing, a human contact that's already existing. And I see an analog because one of the things that we know about fraud protection, fraud prevention, is there's a social engineering that fraudsters do when they do kind of have an outreach, especially for consumers, is not sharing, not telling anyone. Keep this a secret. This is something you have to act now. It's very engineered. And one of the best things is about people sharing information. It's a family member saying, "Hey, I wanted to ask you about this." And it's one of the things we actually taught in our intervention. And I think there's an analog for that at the provider level. Cybersecurity is a public good, where there's lots of reasons that these financial providers aren't sharing kind of the fraud patterns that they're seeing across the ecosystem. And that relates directly what Benny said in terms of there's the whole way of operating kind of and thinking has to change. It doesn't, if you're going to be an adaptive system to this, because the fraudsters have already adapted. They are the test and learn adaptive. They're beautiful adaptive systems in a sense. And so to be able to respond to that, there has to be this level of information sharing. And so with that, and I know it sounds kind of pie in the sky, but I think very much about kind of design, how you design interventions and solutions. And it's a design parameter, right? How can we leverage the social element or you leverage AI for the social element to create better prevention or protection, right? There's certain like design parameters here which requires work. And quite simply, it's going to require innovation on the side of providers and regulators, because the status quo isn't going to work. You just have to adapt and change and leverage that AI.
So I'm going to turn to Patrick because of his raised hand, but I also, I mentioned earlier, if you're not reading Bits About Money, you're doing it wrong. If you go through some earlier posts of Patrick's on Bits About Money on liability issues and fraud protection issues, there's some really useful stuff in sort of thinking systematically about these things. And we have some comments in the chat and the Q&A on this. But one of the things that I think we have to be really concerned as a financial inclusion community, one is liability should flow to the people most able to bear it, but the people who bear it are going to make decisions about who they're going to serve based on how much the potential liability is. And one of the reasons why it used to be so hard in the United States to get a credit card if you were from the wrong places was because the liability that went along with issuing that credit card was too high for the potential profit you were going to make from having that customer. We're potentially entering that realm again, but also realizing just because the regulation says that this is how you have to handle a customer complaint does not mean that that is the experience of the people at the lower end of the scale. That is the experience of the people at the highest end of the scale. And the rules don't dictate the actual customer experience. It is the person who's running that experience. And they are making decisions about how seriously to treat a customer complaint based on, is this a valuable customer to me or not? So Patrick, with that, as background, let me turn it over to you.
So, thanks very much. I also wanted to talk a little bit about the liability and institutional design. Um, and I'll make this broad observation that different countries obviously have the right to make different choices and have made different choices, and that there are these have material consequences for people in different nations. I'll observe that in the United States, we made a choice relatively early to say one of the prices society extracts for giving banking licenses is if anything happens, anything at all on bank rails that defrauds a customer, it's the bank's problem. You can contractually move it to somebody else, but the bank always backstops it. That decision is not made in some countries. And so as a result, if someone gets defrauded via a text message that gets them to send a bank-to-bank transfer in some nations, and you call the bank and complain, the bank says, well, don't get defrauded in the future. This the regulations in the United States are sort of pattern agnostic in that it doesn't matter how you got defrauded. It doesn't matter if you were held up at gunpoint for your ATM card. It doesn't matter. The flavor text of the fraud doesn't matter. It doesn't matter if an AI was involved. We had these regulations before there was an internet. It just says, doesn't matter. The bank will figure it out, or the bank will pay. And I think there is some elegance there in that the banks are broadly well-resourced. And from an institutional design perspective, you want someone that is broadly well-resourced and has some continuity to them, such that if a user who is experiencing in the financial industry for the first time this week has an issue, that it goes to someone who has multi-decades of experience and a team that is staffed out to worry about these things. I also think, broadly, we run smaller, many of the folks on this call run smaller financial institutions that themselves depend on banking partners. And in the category of smaller financial institutions, some start up all the time and some exit the business all the time. And it is socially beneficial to say, okay, in the event that the institution that you, the end consumer, had an issue with, whether that is the institution's fault or whether that is due to the activities of outside actors, even if the institution that you were dealing with does not exist or is not resourced to handle the problem at this moment, there is still a longstanding institution that has great amounts of regulatory oversight, et cetera, that has signed on the bottom line for for this year. And I will say, Tim is incredibly correct in that this is not an institutional design choice that has no consequences. There are some populations that the regulated financial industry in the United States would very much like to walk away from due to the amount of operational complexity and liability that they take on. And so there's a different set of regulations that say, we understand that as capitalist businesses, you would like to not serve particular parts of the United States. We are removing that option from you. So we'll leave other nations to their choices, but they are difficult problems.
They are difficult problems, and the calculus of that is likely to change as the amount and volume of challenge happens. The most important thing is the banking system, not the individual customers, and we quite possibly will see regulators changing their calculus across the world based on the most important thing is our banking system doesn't collapse, not what portion of our population has access to a bank account that they can easily use. And we haven't had to think about that for the last 20 years. We've been moving very steadily in this direction of what matters most is including more people, not the systemic integrity of the system, and that calculus is changing very rapidly. We're a little over the hour. As I said at the start, the point of this was not to solve all the problems. The point was to catalyze the conversations. I feel like we've been reasonably successful there. I do want to point out there's a survey immediately after this webinar that should pop up on your screen if you're leaving, or in an email afterwards. The most important part of that survey is the end, which says, what do you think are the next most important steps? That we want to capture those and continue to catalyze additional conversations. So really interested in people's perspectives on what are the most important next steps. FinDev Gateway will continue to be a big resource for this, as well as the Five. So if you haven't subscribed to the Five, please do so via the financialaccess.org website, so that you we'll continue to cover some of these issues. But I want to say a big thank you to the panelists for doing this in very short order. We planned all of this in less than 2 weeks, mostly asynchronously, to try and do this globally. This is a global problem. This isn't a financial inclusion problem elsewhere. This kind of scary thought I want to leave with is an article I saw this week about the relatively low levels of bank account usage in Mexico, which can be directly tied to bank crises in Mexico in the 1970s. That when the financial system, whatever part of it gets compromised, it has long run consequences. It isn't just, did the mobile money system come back up 48 hours later? Doesn't fix the problem. Once there's a run on the agents, once there's a problem with the banking system, it's generational rebuilding that trust and changing behavior, even for very short-term challenges. And that is one of the things that should really galvanize all these conversations, is that this isn't a typical technology, move fast and break things. When the financial system breaks, you can't move fast and you can't fix it later. And so that is a big part of how we have to change how we're approaching these from my perspective. So again, thank you to everyone who attended. Please do reach out to me, to any of the other panelists with other ideas and questions. We're going to work with FinDev Gateway to answer questions that came up in the Q&A in the chat that we didn't have a chance to answer, and hopefully continue to play a role here in organizing this community. My closing thought of hope is, it is amazing what this community has accomplished in the last 20 years. I think if you had told anybody in the year 2006 where we would be in financial inclusion, no one would have believed you that we could have made this much progress in 20 years. So I have a lot of faith in what this community can get done when it decides to go out and do it. But I do want to, closing, regulators, funders, this is on you as much as it is on anyone. There have to be programs that provide the resources, the human capital, and the capital to make sure that the financial inclusion institutions can cope with this, because they are not resourced for it right now. And you are the people who can potentially do something about that. So that's my closing appeal across the board. Again, thank you, Patrick, Benny, Bouchelet, Andre, Matthew. Thank you for joining us. And we'll look forward to continuing these conversations as much as possible. Thank you, everyone.
Thank you so much.
Thanks, Tim. Cheers, everyone.
Cheers.